Today, we're going to talk about how real estate funds work. I got really overwhelmed when I first started going down the rabbit hole of researching what it took to invest into real estate funds and what all went into it. And as I've gone down the rabbit hole, I found out that it's actually a lot simpler than you might think. There is some overwhelming language that makes you feel like it's a little bit more complicated, and it's really like the same thing as learning a different language like Chinese if you haven't. So there is a little bit of a learning curve, but at the end of the day, you're really just investing in a business the same way you could invest into a stock. It's the difference between something that's on the market, a publicly traded company, and off the market. That is what it's like to invest into a real estate fund versus a stock or something like that. So it is a very similar process. At the end of the day, all a real estate fund is doing is that it's taking multiple people's money and pooling it together into one entity, which is called a real estate fund. And then that entity is going out and buying real estate with it. And there's typically two parties in it. There's a party called the limited partners, and the limited partners in plain speak, all that is the people with the money that have the money, but not the time to invest. And then there's the general partners, and those are the managers of the fund. And what the managers of the fund do is that they do all the work so that the limited partners can have something that's passive. And typically the setup is that the general partners will make 100% of the decisions, and the overall profitability of the real estate depends on how well the general partnership and how well they execute on the strategy. So is a REIT the same thing as a real estate fund? It's actually not. A REIT typically on the open stock market, it's a publicly traded company that it is then buying real estate, just like the real estate fund is. The real estate fund is typically a private entity that a lot of times the fund managers can't go out and market for potential investors. So you really have to have a friend that's invested in it, or have to have a relationship with the person who's running the fund and get connected with them and make sure you have a couple of meetings with them and really have developed into a relationship. And this is because of SEC rules and regulations is why this is the case. Okay, so then the next step of investing into a real estate fund is you have to figure out if you can get approved for it. So investing in a real estate fund requires that you're an accredited investor. And what an accredited investor means is that as a family, you have certain income thresholds that you meet, or you have a net worth that you meet. And from the income level, if you only have one income, $200,000 a year of income as an individual. If you have two incomes, $300,000 a year. Or if you don't have that income, you can be accredited if you have a net worth that exceeds $1 million. Now, you can't count your personal residence as part of your net worth. It does need to be outside of that. So typically investing in these real estate funds requires that you're an accredited investor. There are exceptions to that rule. That's on a case-by-case basis, and it depends on the real estate fund, how they handle that, and what opportunities are there for people. Okay, so once you have the relationship established and it's been established that you're an accredited investor, then the next step that's very normal in the process is to review the materials and the strategy of the fund. It's very common that fund managers will have a pitch deck, which is basically just a PowerPoint presentation that lasts about 15 minutes, goes over the strategy and why it's a really great investment opportunity. So let's say you get through that, you reviewed all the information, and you do want to invest into it. You're an accredited investor and you want to invest into the real estate fund. The next step is that you have to figure out where the money's coming from. And believe it or not, you can invest cash in from your bank account, or you can take IRA money when it comes to real estate and put IRA money into a real estate fund. Now, it does need to be a self-directed IRA. It can be a self-directed Roth IRA, or it can be a self-directed IRA. The process is really very simple on that. It sounds more complicated than it is. It's really the similar process of opening up a checking account at a bank. You really just need to open up a new IRA account with a self-directed custodian and transfer the money over to that self-directed custodian, and then you're able to put the money into the real estate fund. So once you have that self-directed IRA, if you're going to put money not from your checking account in there, what I've seen to be true is that the money then will get transferred over to the real estate fund in exchange for ownership shares in the real estate fund. And then what will happen is then once the real estate's purchased, the fund will purchase that and the fund will own the real estate. And then you'll own shares as an investor into the real estate fund that owns the real estate. And really at that point, it really depends on the type of fund that you invest in. Some funds will buy a piece of land, do a development, and then turn around and sell it. Other funds will just buy and hold on to real estate. So it really depends on the strategy, and the risk levels and thresholds of real estate funds are really all across the map. There's things that are very risky, and there's things that are very safe. So you have to be able to understand all the nuances and the different risk profiles of investing into real estate and what's riskier and what's less risky. It's kind of the same thing if a long-term Warren Buffett follower that wants to just buy and hold on to stocks. That's a very low risk profile versus a person that's day trading and actively buying and selling in every single day. And real estate has that exact same spectrum of risk. So if you'd like help navigating this world and have the desire to build some passive income and some passive wealth through real estate, we'd love to help you understand what your personal situation is and what your options are. So let's get into a relationship. Sign up for our passive profit strategy session. You can find the link down below, and we'll get going. And if you've enjoyed this content, make sure that you check out our other stuff. Thanks and have a great day.